Nedbank. Now, of course, we know that Nedbank is part of the Old Mutual Group. We know about the whole story that's been going on for a while about the Old Mutual Group wanting to dispose of Nedbank. And when you compare it against the other three that we've been beginning, let me start off with you, Paul. When we compare it against the other two banks that we've been talking about, and of course by extension, Capitec, would this be the entry point, do you think?
Look, Nedbank's certainly an interesting one. To put it in perspective, Standard Bank and ABSA and FirstRand are all up there in the kind of 120 billion plus category.
Market value.
Nedbank is like about an 80 billion company. So if somebody wants to come and buy Old Mutual's 50% stake, they're going to have to come up with 40 billion rand. Quite a big check, you know, even for these big giants that wander around the world.
True.
I think it is for sale, though. I think at the right price, Old Mutual will be happy to let it go. And I think it's a well-run organization up to a point. I think its technology has lagged the others. You'll certainly notice that if you try to use their online banking platform, it's not so hot. And, you know, it's got a big position in certain areas like property finance, where people used to laugh at them in years gone by because they were always funding things that others had turned away. Yeah. But now it seems to be positioning them quite favorably. Yeah. You know, I think whether it can be one's entry point into the sector here, I can't really see why you would buy this one over the others unless you had a strong view that some buyout offer was imminent. And, you know, not a lot of money going around in banks at the moment globally. So I think it's a bit naive to think that you can buy this one and get a Hail Mary exit because it gets a buyout offer. So Old Mutual may be stuck with this one for a while now. But now, when you look at Nedbank and you look at the competition that we've been seeing in the banking space, I mean, people have been talking about this ad nauseum, about how everybody's getting to the unsecured market and now everybody's trying to get, some people have estimated there's as much as 8 million potential new customers that could be had in that environment. Anthony, when you look at that, would Nedbank be the chief beneficiary out of this, or is FirstRand and their man, what's his name again, Steve, the poor salesman?
No, I think traditionally Nedbank has been a transaction bank. People transact through Nedbank and they borrow from the other banks. This bank has a problem in extending credit or risky credit. They've got the highest non-performing ratio or bad debt ratio of all the top banks, and it would imply that they have, you know, credit granting risk procedures that are not up to scratch. We think, again, although top line growth was good, it possibly is unsustainable. The valuation looks, again, full, and we would, you know, again, say find value elsewhere in the market other than Nedbank. We think that there's unlikely potential upside in terms of M&A. If Old Mutual does sell its stake in Nedbank, it will sell its stake in Nedbank. Minorities won't participate. So it's very unlikely that you're going to see some kind of, as an outside shareholder, uplift in some kind of M&A event. Is
it possible, though, that we may see an outside shareholder coming in? HSBC walked away the last time round.
Yeah, it's possible. I mean, Old Mutual stated that, you know, their whole portfolio is up for review. There is a lot of pressure for them to kind of unlock shareholder value. Yeah. And I would imagine if the right buyer came along for Nedbank, they would sell it.
But I suppose the whole question then becomes, who's got that kind of capital in this environment when Basel III is coming and there will be demands for extra capital?
Sure, there are lots of well-capitalized banks in the world. Standard Chartered comes to mind. But I think that, again, the point is that Old Mutual will benefit from any M&A, not the outside shareholders in Nedbank.
Right. Paul?
Look, the other exciting thing to mention about Nedbank at the moment is that their chairman, Mr. Royal Causa, is engaged in a nice firefight with Jimmy Manya.
On behalf of everybody.
Yes, which is quite entertaining. And my own view of that particular saga is that the more people are rude and offensive to each other in South Africa, the better. Because at least then, you know, we're having a good to and fro about what kind of life we want and what kind of institutions we like. Yeah. For me, I wouldn't say it's hot, although I could imagine at some point we will see a deal. The trouble is, I don't know how it's long. I think your point about Basel II is correct. Anthony counters that by saying, well, Standard Chartered has got lots of money, and that's right. HSBC, I think, is still relatively well off. But what you need is someone who isn't really in emerging markets or in Africa much, like Citi or JP Morgan or one of those guys, to come here and to do some kind of buyout offer. The trouble is that could take 10 years. And I'm not sure whether you want to be in the stock that long waiting.
Yeah. The incredible thing is that, I mean, we were speaking about how Africa is the next investment frontier, and everybody speaks about the African consumer like this is really something that is extremely hot. And here we are, we've got the players in here who are poised to take advantage of that. And we're saying the guys who have the money are not hot. Are you going to say Nedbank is hot?
We think that there's possibly 6% share price appreciation upside here, 4% dividend yield, so maybe 10% total return over 12 months.
Over 12 months, okay.
We think that, again, there's better investment opportunities elsewhere, so not hot.
Yeah, 6% with inflation and 6%, it's certainly not hot. Paul?
Yeah, not hot for me either.
Oh, goodness me. I'm not finding any heat up here. It's certainly getting a little cool in here.